Happy Friday, happy trading. Nothing I'd rather be doing than trading. We'll go over the trades of the day. Let's start off with the flow, with the stock with the greatest flow. Here's Exxon. No. Walmart. No. Uber. No. Merck. Maybe. Intel. Looks like it. C. I'm going to give it to Intel. Greatest flow of the day. I was close with the 20 and the 200 on the 2-minute. Fab 4. Elephant bar outside of the Fab 4, and then right off the previous day's close, and then it used the previous day's close and an elephant bar off of that on the 5-minute, and it was able to take off as well. Let's go over to our trades. We first traded C. So what we saw here at C, if we look at the 2-minute, we have a bull 180 right here. We risked it right here. We looked at about high, low. We came up with about $1.50. One lot. Went up, went down, and then came right back up. We got out right about here, which was a good trade. Left some meat on the bone, but overall a good trade. Then it looks like it went down. I had nothing to really say about it going down. It just looked like it was too far away from the 20 and the 200 to me for it to keep going. It wasn't close enough to the 20, so it came back to the 20. Didn't keep going up. Seemed to filter off. Then we got a move right here. At this point, we could be saying, hey, it's going down. It's within the 20 on the 5-minute. It's within the 20 on the 2-minute. So we're looking at down opportunities now. So here's a potential taken out of the green bar. Sell right here, set the stop. Or it might be even better to use the 5. Sell right here, set the stop. You got a nice red bar, nice red bar, nice red bar. Take that all the way down. We got a position of power at this point. Position of power. We can definitely do a red bar takeout. Red bar takeout. Goes down, goes down, goes down. Continues to go down. Now this is where we'd stop. That looks like about 1250, 1250, or this looks about 1 o'clock-ish, so 13. Probably could get it a little closer. If you were looking at the 5-minute, you would say, hey, this seems pretty far away from both the 20 and the 2. Get this 70% bull 180, or play that up. That would have led to this on the 2-minute. Elephant bar off the 20. Play that up. Broke the 20. Maybe looking at it to go down. What we did right here is we saw a elephant bar at the time it formed. Set the stop right here. Bought into it. Wasn't really too much of a sighting on the 5-minute, but on the 2-minute it looked like it popped up, and we got out of it after we had a significant red bar take out a green bar. Next stock that we did, we got an Intel. We didn't get in the beginning just because this was like a $3 candlestick. Ideally, you would have taken this candlestick. We could have taken half of it and put our stop halfway there. We could have afforded that. So $1.50 instead of $3, but we just decided to skip it. Let's say you did the $3 candlestick on the 2-minute. Set the stop below. Would have been a great trade. We made the mistake of looking at the 2-minute, seeing the red bars. Had about 3 red bars. We combined them and we said, hey, that's an elephant bar, so it's going down. So we sold right here. It's within the 20 of 20-minute on the 2-minute chart, but on the 5-minute chart, it's not within the 2-minute. So it reversed on us, clocked us out right here, and we just lost what we risked. So it wasn't that bad, but it would be nice to make that trade when it's within the 2-minute window on both time frames, or the 20 on both time frames. So for the rest of the day, I think Intel just stayed up. It's flat right now. It's 11 o'clock. No real action. 12 o'clock, no real action. Looks like it is going down, actually. Not too much to really sing home about. Went back up. 14. Nope, it was just down and back and forth. Now you could have took this position. This was a green bar. I'm going to say an elephant bar off of a 20. And we take it because it's off of the 20. And because it's off of the 20, it gets a little bit more significance to it. Off the 20, you could have took that up a little bit. And you can see it's off the 20 on the 5-minute as well. Off the 20. And you could have got a nice little bump right there. But that should be the end of that. Then we tried to take a sell. We saw this as a bull 180 right here. This green bar takes out a red bar. So we wanted to do a bull 180. We risked it. We saw the length was 50 cents, 40 cents. Set the sell. And it went nowhere. We just figured since it went up, it would go down a little bit, but it went nowhere. And that's just, price to play the game. It would have been nice to take this in a position like taking this, if this was higher or a little further away from the 20 would have been a better opportunity to take it. Like this tail bar right here is further away from the 20. That makes it a better opportunity for things to go down. This was just right on the 20. So just keep that in mind. Next stock that we took was Exxon. Exxon, you're looking at Fab 4. Goes down here. You're expecting a red bar. You get a green bar, green tail bar. So that's saying it's going to go up. That's a bad position for it to go up. Then you get a tail bar down, which is a good position for it to go up. So you could risk this out. That's 71, about 60 cents. Set the stop right here. Do a sell. You would have got stopped out. You're on a flat 200. You're in a position of power. You get a red bar takeout of a green bar. This gives you another opportunity to sell. You measure this. 30, about 40 cents or 50 cents. You take that one, sell. You get a nice move going down. And that would have been a great trade right there. And now you look at the 5 minutes, it's a distance away from both the 20 and the 200. On the 2 minutes, it's a distance away from the 20 and the 200. So it's probably going to come back to the 200. You get a bull 180 right here. You could buy that, set the stop, let it ride to the 20. See if it gets any more traction. It doesn't. It's within the 20. It's within the 20, but it's still on the outside of the 20 on the 5 minute, so you know it's going to drop. So as soon as it gets closer, you probably would want to get out. and it would make sense to get out. So it's on the outside of the 20 on the 5 minute, right? There's a tail bar right here. But on the 2 minute, it's dealing with a close flat 200. So we know that strong positions come from this place. So you would have to guess. Probability says it's probably going to go down from here. You get the sell move, and keep in mind that the 200 is an area, or it's a zone. You get the bullish call of a sell right here. You sell, set the stop, measure it out, 50 cents, let it ride. It's outside the 20 again. And you wait till it's at a distance on the 5. It's at a distance on the 5. It's probably going to come back in. It's a distance on the 5. It's probably going to come back in. So you get a 80% bull 180. Probably play that up, set the stop. Nope, didn't work on that one. Oh, didn't work on that one. So I guess I was a little off. It went down even further than I thought. It went down even further. So it never came in. This, it almost came in. That would be this bar right here. Now we have right here a bull or a elephant bar off of a 20. That's probably significant. Nope. You get on the 5 minute around 14, you get a tail bar. Tail bar is significant. You play that, you set the stop, you measure it out. It's about 33 cents. You set the stop. That leads to this, which is probably this right here. And what we did, we saw a bull. We weren't looking at the 5, so that's why I'm covering a lot of the 5 on this one. What we did is we did a bull 180, and we did a bull 180. We thought hitting the 200 would make it go down, and it just kept going up, and it hit our measurement length out. So we were wondering why, and it just makes sense because if you look at this tail bar, elephant bar, it was going to go all the way up to the 200, which is a zone. And this is not that zone. That zone isn't hit until right about here. So it just shows you how the 5 can be used with the 2 minute, and should be. And then here you see a tail bar, and that's a sell because we know it's a sell, but it's even more of a sell because that tail bar is off of the 5 minute flat 200. And that's why that move is so dramatic going down. So let's go to Walmart next. Walmart, keep in mind on the 5 minute, it's so wide, right? So we can't expect a move to go up too high, even though it's close here. Let's draw the Fab 4. Fab 4 would be so right now it's within the Fab 4, so you wouldn't want to do anything within the Fab 4. And then right here is where you'd want to get in if you did. Green bar takeout right above the Fab 4. And you could take this move here. Keep in mind this is a distance away from the 20. We don't expect it to go too high up because this is such a far distance away, such a wide state on the 5 minute. So we'd sell right here. Plus we have a downward tail bar. Now we have it comes right back, and maybe you did a color change here, and I would sell again right in the similar area just because we know it's not going to go so far. Probability tells us that. Now we have a 1, 2, 3, and that might be a right shoulder. So that's the top, so it's going to go down. We have a 4 in a row. That's a large sell. Set to stop. Looks like we only got that type of move. Oh, here comes more. Here comes more. And there's the large move. And let's say we wouldn't have got that large move. We knew that this was wide. So if we knew that that was wide, we knew it was wide, so we knew it was going down. Let's say we didn't catch that as a elephant bar. We could say, hey, it is going down. This is flat. It's angling towards a move like that. So we do a red bar takeout here and color change on the red and sell here. And if we didn't get that, probability indicates we should do a sell of a tail bar off of a flat 200. And if we didn't get that, color change red off green. And if we didn't get that, there's not too much we could have caught. This one, it stops right here. Nothing really to indicate that. Stop right there. I think that's where it is. We're at 1310. So it pops up here. And keep in mind, this is the previous day's close. So the previous day's close can be used as resistance. This is the previous day's close with a falling 20 on the 5 minute. Right? So that's a 2 support area. And that pushed it down here, so a red bar takeout there. So you might not see it here, but you could say you combine these two bars, and then you have a bull 180 right here. Set the stop, and then it just further goes down. And then I don't know how to gather this, but this move just, as soon as it gets in here, you have a elephant bar off of a 20, and it's 3:30 if I'm not mistaken, 4 o'clock last hour. So just the end of the day, changing the move, going back up. So we didn't touch on Merck. Let's go to Merck. So Merck, you could have played it like Fab 4, wrong color, green bar, measure it, 20 cents, set the stop, maybe take that amount of profit, and then off the 20, sell. Keep in mind, I don't know about that one. I don't know what to keep in mind on that one. Does it go further down? It seems to go further down. And I guess the best indication would be on the 15 minute. So as you can see on the 15 minute, right here you have a downward tail bar. So this is pretty far away. Downward tail bar. Set the stop. Let's measure it out. Dollar, either 80 cents or $1.25. I don't know. Either or, but then just measure that and then take all of that and do a whole 15-minute trade. That would have got you everything on Merck, or as much as you could get. This is hard to justify because this is a cross, X cross, and where the 200 is going, acting like a 45-degree angle. So again, I'd say your best bet is to use the 15 on this example. But let's say we didn't. Add the sell here, set the stop. The stop was at 114. They're still way below. So you're good. You would have been more than good. Yeah. There's nothing that would have gotten you out if you would have managed to hold that whole time. So the next one, we didn't do Uber. So Uber, you're like Fab 4. And again, not saying that this is something you should play. It's just how, if you did play it, how I would play it. Wrong color, right color, tail bar, set the stop, let it go up, let it go up, let it go up. Ideally, I'd probably, if you could, you'd get out there, but there's no indication that you should. You'd go down, you'd go down. You wouldn't hit the stop. And you would just be trapped. You might hit the stop now. So let's say you got out the first time. Instead, this is a let's say you did get out here. Maybe you have a bull 180 here, set the stop. Probably look over here and you'd be like, oh, but this doesn't really seem to have anything that indicates it's really a bull 180. Maybe that's not a real bull 180, so don't play it. This is a distance away from the 20, a mini bear 180, set the stop, going down. It's a nice trade. You got to the 200, get out on the 200. We're always looking for narrow states like this. Do we get a move off the narrow state? Looks like there was a move in a sense, but I don't know about it. I would have just avoided this stock, to be honest with you. That's how I would have played it. I would have avoided it. And I would have avoided it because of this neutral bar that ranged from here to here. And you notice on the 15, it stayed within that same neutral bar the entire day. So that's what we have gathered for today. It was a rough Friday, but we made it through. Friday is always the worst day for a trader. So till Monday, I'll see you. Have a great weekend.